Welcome back. RER Deals of the Week. This is the deals for the week of November 9th and November 16th. We're going to bring you good deals. We got two really good deals for you. One in Jersey City, one in Newark. I'm going to go through both of them. But before we go through those, let's go over our core assumptions. Here's the core assumptions for Jersey City's market. 100% of list price. 7% is the vacancy rate. 7% is management fees. $2,500 if all utilities are combined. If they're separated, it's $1,250. $300 per unit per year for water. 25% down payment. Now remember, these are our core assumptions. Yours will be different depending on your personal financials and your debt structure that you can achieve in the market space. So let's take a look at what's going on in Jersey City. We got a deal for you here, I feel at least, in the Jewett Ave, McKinley Square neighborhood of Journal Square. This is just a little bit south of Journal Square, but you get paid for that extra risk because it's in a little bit of a more urban grade neighborhood. It's a two-family, asking price is $135. It's attached on both sides, fully renovated, or at least from the pictures it looks like it's fully renovated. Doesn't need much work into it. We are still building a $10,000 cost assumption for any added work that may be needed in case once you take over the asset. Projected rent roll for Unit 1 will be about $1,400, and projected rent roll for Unit 2 will be about $1,100. The reason Unit 1 is higher is because of the fact that it will have a finished basement attached to it. It'll bring a second bathroom in it and some additional rooms. So you should be able to accrete some higher rents because of that specific reason. If you look at the cash flow numbers here, you're going to need about $51,000, call it $52,000 to buy this property if you're going to use some debt leverage. And so let's look at the leverage returns. Your returns are 15.3%. That's about $658 a month in net cash flow after vacancy reserves, management fees, PITI payment. Not a bad deal. Actually, a pretty decent deal given the fact that you're making a gross 9% cap rate on this deal once it's stabilized and you put in the tenants. So, if you got some money, you got about 50 to 55 grand, and you want to invest into a asset and earning a 15% rate of return leverage, this is definitely a decent deal in a good market space in Jersey City with some potential upside, but I would be more cautious and take the current yield on it, and that's how I would analyze it. So, Jewett Ave, asking price $135, two-family asset, definitely worth consideration. Let's skip over to Newark now and take a look at what's going on in that market space for you. I will go over the core assumptions one more time here. You can put it up on the video slide here. There's two key differences to understand. The vacancy rate is higher, it's about 9.1%, and management fee is higher, it's about 10% because the market's a little bit more tougher to collect from. It takes managers a little bit more effort. That's why there's a little bit more of a compensation structure add on there. So what do we got for you guys here? Three-family asset, $145 asking price, Lower Vailsburg section. Yes, I'm not a huge fan of the section, but you are getting paid for some of the risk here. Fairly renovated asset. Exterior has been done. Interior has been done well, but not so well in my opinion. Kitchens definitely can use some work. Bathrooms can use some work. It has actually rented currently. It's 9 total bedrooms, 3 total bathrooms with 3-1, 3-1, 3-1 each unit. Good unit size. That's where you want to target, especially when you go into a Vailsburg or a Lower Clinton Hill, because the density of the average household is much greater. So it's definitely worth considering having a more bigger asset for rental units such as a 3-bedroom. So what do we got the actual rents here? As you can see, it's $950 for the first, $900 for the second and third floor. We budgeted about $10,000 in value-add investment to upgrade the kitchens and the bathrooms over a period of time, but it doesn't mean you need to do much here. The utilities are already separated. If you got about 55 grand, again, like I said, you can buy this asset. It's going to earn you a 20% rate of return, which is about $909 a month. So, Jersey City, 50 to 55, Newark 50 to 55 in cash investment. Jersey City, you're getting about 15% levered. Here, you're getting about 20% levered. The cap rate on this deal, that means the all cash scenario, is about 11.1%. So the double-digit rate of return on all cash and leverage here, definitely worth consideration. So, went through two deals with you guys. You got about 55 grand. Don't put it in a CD out there. Try to invest it in the local market. Earn a decent rate of return with current yield and rental cash flow. This is Ankit. This is RER Deals of the Week. See you guys next week. If you have any questions, you have any concerns, or need some property management, feel free to call us at 973-894-3004. Tune in next week. Thank you so much.